Okay, now I'll hand over to Mr Laxale.
Thank you, Chair. Thank you, Governor, and your team for coming today. I've got a few questions about payments, if that's all right, and you mentioned that in your opening remarks. So at least 75% of consumers are now using digital payments, and ABC analysis of RBA reports state that close to $1 billion a year is lost on surcharges. CanStar Research has that at $4 billion a year. How concerned is the RBA at the impact of these costs on businesses and consumers?
So let me just go back a bit to give you context for surcharging. So back in the early 2000s, we regulated interchange fees, and we also required that schemes remove no surcharge rules on merchants, so that merchants, if they were receiving a very expensive payment mechanism, and at the time that was typically credit cards, that they were allowed to charge a bit extra for that. The reason being that merchant costs for payments, merchants have no choice but to take payments, and they build it into the prices for everything they charge, and so everyone is paying for it, regardless of whether you use cash or you use a card. So that was the genesis of it. It was supposed to give consumers an idea of which were the more expensive payment instruments, and they could choose then whether they wanted to use a card or cash. And it also resulted in competition because schemes that didn't want to get surcharged were forced to lower their costs to merchants. Now, you highlight an issue that we are going to be looking at, and I mentioned in my opening remarks that we're looking to do a comprehensive review of payments regulation when the new payments regulations pass Parliament. But actually we've decided to bite off two bits of that, which is the interchange regulations and the surcharge regulations, and do a review of that soon. So we're actually going to start doing that now.
Okay.
The change since the reason I bring up the history is that what's changed since then is that cash is now not used as much, and there's a prevalence of surcharging where it's just one surcharge for it doesn't matter what payment instrument you use. Now, merchants do need to offer a surcharge-free instrument. They cannot just surcharge everything because otherwise it's supposed to go into the general price. They can't. So they do need to offer a surcharge-free instrument. It's typically cash, but most people don't use cash anymore. So everyone's just getting surcharge. It's prevalent in the retail industry, particularly hospitality and those sorts of things. It's not very prevalent. If you go to Coles and Woolies, for example, they don't surcharge. So we are going to be doing a review of this. We're going to be looking at the economic circumstances now, whether or not surcharging is still fit for purpose as an instrument to improve efficiency and competition.
Just on your comments on LCR, in December 23 you said you're looking at mandating LCR. Is that by mid-2024?
Yeah.
Is that still
So the board,
case?
the Payment System Board looked at this yesterday, and we were looking for the amount of least cost routing being implemented for merchants to be much higher than it was. Our numbers suggest now it's getting up towards 75%, so that we think that's enough. We don't think we need to regulate it, given the improvement in that we've seen.
Okay. In your answer just before, I think you've highlighted a problem that, to my understanding, exists, and that's that single fee surcharging. How will businesses and consumers get the savings from low-cost routing when many small businesses in particular, a lot of their point-of-sale packages and a lot of the merchant providers that they sign up with don't actually distinguish in their fees? How are you going to attack that? So
the way to think about it is that if the let me go back a step. The merchants, a lot of the little merchants like the single pricing because it's very simple for them. But what the acquirers who are offering that can do is if they can implement least cost routing in the background, that will allow them to offer a lower single fee for those small merchants. So that's the way you would typically look for it to flow through, so that acquirers who
might also allow them to.
They basically implement it in the background, so that means their costs are lower, and then they can pass those savings on to merchants in the single fee that they offer them. That's what and merchants, by shopping around, finding the one who's going to offer them the lowest single rate.
They can pass those savings on, but they don't have to.
They don't have to, but as with all of these things, what we're looking for is competition between the acquirers. So if I don't pass it on, my single fee might be higher than the person who does pass it on. So that's what we're looking for.
So my impression, just as a consumer, someone that buys coffee and goes to hospitality venues, is that more businesses are having to surcharge at the moment. Small businesses in particular can't absorb that cost anymore, particularly given that the use of digital payments has skyrocketed, particularly after the pandemic. Also, I think the software to pass on that surcharging is a lot more mature than it used to be 5-10 years ago. Do you think that's contributed to inflation? That $1 billion, $4 billion?
No, I think that's completely insignificant in the context of things.
Okay. You mentioned your review. Is the RBA considering mandating a fee-free digital payment option for businesses and consumers?
That's not something we're mandating at the moment. As I said, if there is going to be surcharging, you do need to offer a surcharge-free option. That's typically cash, but it doesn't have to be. You know that you'll know from airlines, for example, they can't offer cash, obviously, but they offer surcharge-free options. They surcharge on credit cards and they offer surcharge-free options. So I don't think we'd go as far as mandating a digital surcharge-free option, but there must be a surcharge-free option if there is going to be surcharging permitted. But as I said, all of this stuff will be looked at in the context of a review.
Why wouldn't you go that far, just out of interest? Because the use of digital has obviously skyrocketed. It doesn't seem to be going back down. Prior to digital, paying for something was fee-free, and now it's, in many instances, not. Why would you distinguish cash and digital in that way?
Well, I'm not making distinction. All I'm saying is that it's already mandated that you must offer a surcharge-free option, and the businesses can choose to offer a digital one if they want, or they can choose to offer cash. Online, they do offer digital surcharge-free options, so it's entirely feasible to do so.
The National Payments Platform offers a zero or near zero consumer cost alternative to traditional card payments and tap-and-go payments, just through direct bank-to-bank transfer. I'm not aware of any banks that charge consumers or small businesses for bank-to-bank transfer.
No.
What do you think the roadblocks are to stopping the NPP from being used as a fee-free digital option?
I'm not sure there's roadblocks. The NPP was set up as a central infrastructure to allow companies to build digital alternatives. Now, one thing, for example, that could be used is QR codes, and you could perhaps link that up to QR codes for payments haven't taken off in Australia, but they're big in some other countries, China in particular, and Asia. So you could. I don't think there's roadblocks to it necessarily. I think it's just that we've already got a plethora of options to pay things in Australia. We have, obviously, cards. Some people use cash. At the point of sale, we could see something else springing up, but I think, again, people have got so many options that they don't see another need for another thing. The point with the Pay ID sort of payments as well, you can I can pay Qantas for my airfare using exactly that.
Yep.
So there are options that are being looked at, but payments is a network business, and you need both people to take the payment, and you need people to use the payment, if you like. And because of that, they usually need a critical mass before it actually takes off in a big way. That's why the ubiquity of cards is so important, because everyone takes it and everyone has a card, basically. So the network effects of that are really strong. When you're starting a new payment system, if you can't get people to take the payment and you can't get people to hold the payment, then it's very difficult to get the thing off the ground.
Why do you think the QR code or that sort of fee-free bank-to-bank payment system hasn't taken off here?
I think mainly because we had such good options for payments in Australia, and the places where it took off didn't have the same payments infrastructure that we had in Australia. So I think that's the key reason.
Even with surcharging, you still think that there's
I still think that, yes, I still think that, yeah.
Okay. It's my understanding that banks and merchant service providers get commissions from major card providers for selling their products, and in some instances perhaps even percentage of the money spent through, the big card providers. Do you think these financial incentives are something that's restricting fee-free payment reform at point of sale?
So let's unpack this a little bit. So merchants typically don't get payments from card schemes. So the way it works usually is that there is an interchange fee which is paid from the acquirer of the payment, which is the merchant's bank, if you like, or the merchant's provider. They pay a fee to the issuer of the card, and the issuer of the card also typically gets incentives from the schemes to issue their cards, as I said earlier, because they want their cards issued more, so the network effects are more, right? So the issuers get these payments. The merchants pay the interchange fees, and they also pay typically any scheme fees that are charged to their banks. So the merchants basically end up paying for the payments. That's the way it happens. Our interchange regulation, by putting a cap on the amount of money that effectively issuers can receive, and therefore the merchants' banks have to pay, that helps to keep the costs down to merchants. And if we can keep the costs down to merchants, they're less likely to surcharge. Now, some of the big merchants obviously can get better rates, and something that we have highlighted in a lot of our publications is that it's small businesses who tend to pay a lot for their payments, and the big businesses don't pay much at all. So one of the things that we will be looking at, and this is why we've been so big on least cost routing, is because we're trying to look at ways that we can increase competition and get the cost of small businesses down, which will, if we can do that, then that will help them with their costs and might decrease the incidence of surcharging as well.
So banks are big merchant providers. If they're getting incentive payments from the card issuers, I mean, what incentive is there for the banks to come up with a fee-free option, I guess, is my question.
Well, this is the challenge. And anything that competes with cards where issuers get guaranteed incentive payment, they get the interchange, and they often get incentives from the card schemes, then that means that if you look internally at the bank, the issuing parts of the business do often have an incentive to try and funnel everything into cards and not. So yes, that's a very real point.
And it's costing consumers and small businesses at the end of the day.
Well, it ultimately the consumer wears it, whether they wear it in terms of a surcharge or they wear it in terms of the price they pay because it's built into the cost base of the merchant. Ultimately, the consumer pays it. It's just where it shows up looks a little bit different. Does it show up in the surcharge or does it show up in the price?
I just find it very frustrating because up until, 50 years ago, accessing our own money, we used to only have a fee-free option to pay for something, and in the last 50 years, and particularly in the last 10 years, it's costing consumers billions of dollars to pay for, goods that they've been paying for free for a long time. So anyway, that's my concern. That's my line of questioning. I really look forward to
these are the sorts of things that we'll be looking at
participating in your review. Great.